Light Sweet Crude Daily Forecast, June 4th, FXEmpire.com. The light sweet crude markets just completely collapsed during the Friday session as 85 didn't even act as support like one would have expected. The non-farm payrolls came out at adding just 69,000 jobs in May, and it certainly won't be enough to drive growth, therefore industrial growth, much going further. And the fact that $49,000 or 49,000 jobs were also taken away from revisions in March and April just put an exclamation point at how the economy in the United States is slowing down. The 85 level being sliced through would have been predicated by not only the jobs number, but the poor economic numbers coming out of China in the early hours of the session. In one sense, you could say that the market caught up with that news, as many traders would have been on the sidelines until non farm payrolls came out. The possibility of quantitative easing has reared its head again amongst traders, but the reality is there will be easing around the world if the economies are all slowing down. Market managed a bounce of sorts at the end of the day, but it was so insignificant that it looks like any positive action will be treated with suspicion by the market. This has us selling any and all rallies until we see a close above the $90 mark. The $80 below should cause some type of bounce, at least momentarily, as it is massive support. Because of that, we really prefer to sell rallies as opposed to a break of the candle, as we are getting so close to that level. Buying just is not possible until we get well above the $90 mark.